Hello, each and everyone watching my channel. You are all welcome to my Accounting for Beginners channel. The name is Accounting for Beginners because I teach in such a way that if you're a beginner in accounting, if not even it's an accounting book before, that is, if you are an accountant, you understand. For the purpose of those watching me for the first time, I think it is proper for me to introduce myself to them. My name is Daniel Amoakun, an ACCA chartered accountant. I've provided accounting services such as bookkeeping and others, including teaching more than 20 years. Let us get into the video. Well, those who have watched my previous videos, you know how I teach by preparing simple notes so that I go through with you. So by the end of the day, after ending the particular subject that is being taught, you'll be able to understand because I gradually go through, explain everything step by step so that you understand it. Today we are on our last subject on the balance sheet. I've done 2 previous videos on the balance sheet. So if you not watch, you can click on the show more section. Click on the link there to go and watch it. We stop at the current liability. So we are continuing from there. Before I continue, the balance sheet is a very important subject. Every accountant should be able to prepare a balance sheet. So if you are an accountant, you don't know how to prepare a balance sheet. Any organization that you are employed, you will be sacked because you are not a competent accountant. Every accountant who is competent should be able to prepare. So please pay much attention to this particular subject. So let us recap what we've learned so far. We learned that the balance sheet is the financial position of an organization for a particular period of time, and it comprises of the asset, the liabilities, and the capital. What are the assets? The assets are normally the properties that the business or the owner used to run the business in order to generate profit. We have the current assets and the non-current assets. The current assets are the assets that are going to be used within 1 year. And the non-current assets are those that are going to be used more than a year. Then the liabilities are the amount owed to an individual or an organization by the business. We have also 2 types, the current and non-current liability. The current liabilities are those that are going to be paid within a year. And the non-current liabilities are those that are going to be paid after a year. Then we have the capital. The capital is or cash or its equivalent or in kind provided by the owner to commence and to run the business in order to generate profit. So we arrive at the balance sheet by taking first, you add up all your fixed assets. Then you add up all your current assets. Then also you add up also your non-current assets and that is from your current asset in order to get your working capital. When you get your working capital, you add it to your fixed assets or non-current assets, so that you get what capital employed. The capital employed should be equal to the amount financed by the owner, which is the capital price plus the net profit. So far that's what we've done. But when you check your final outcome, that the capital employed is not equal to the amount financed by the owner. That means you made a mistake. Go and check your balance, your trial balance. If there's a mistake, if there's no mistake, then you go and check your ledgers. So until you identify the mistake, it will never balance. Even when you have a problem in the ledgers, when you prepare the trial balance, it will never balance. I said I've made a video on trial balance. You can click on the show more section to go and watch. So let us continue. We add up now what? Long-term or non-current liabilities. What's the meaning? This is any amount the business owed organizations or individuals and to be paid after a year. Examples are long-term loans, mortgages, and debentures. So as I've said, non-current liabilities are those debts that are going to be paid after a year. Examples are loans, mortgages, and debentures. Then the capital, we have the capital and drawings. A, what's the meaning? The meaning of capital. amount of cash or its equivalent the owner contributed for the commencement of the business. That is anything the business owed to the owner. So it means whatever the owner will contribute to start and run the business is what? Capital. And it's the amount that the business owed to the owner. B, at times the owner may withdraw money for personal use. This is called drawings. This will reduce the capital invested by the owner. So when the owner withdraw any amount of money for his or personal use, we call it drawing, and to reduce the amount that he or she has contributed to commence and to run the business. So let us look at our final format. So final format, we have fixed assets, land and buildings. The amount is here. Motor van, the amount is here. Then you have machinery, the amount is here. Fixed assets, fixtures, the amount is here. Then you add up all your fixed assets. You add up all of them. That's all to get a figure. Then you take your current assets, which are inventory, the amount involved, receivables, the amount, prepayment, the amount, then bank amount and cash. Then you add up all of the current assets so that you arrive at a certain figure. You deduct it from what? The current liability. The current liabilities are payables, the amount, accruals, amount, overdraft, the amount. Then short-term, the amount. You add up all so that you get your total. You get your total current liabilities. Then you deduct it from your total current assets. You get what? Your working capital. You add up the working capital to the total of fixed assets, which is this particular one. That is total fixed assets. So that you get what? Your capital employed. It will be financed by the capital. The figure is here. Then you add up the net profit or profit. The figure is here. Then you deduct whatever drawings the owner has done so that you arrive at this figure. This figure should be equal to what? The total of the capital employed. If it's not equal, you've made a mistake, you have to go and check it. So we will look at an example. We use the trial balance to prepare the balance. So example, for the year end trial balance of not prepare a balance sheet for the year ending 31st December 2018. So this is the trial balance. I've made a video on the trial balance. So as I've said, you can click on the link below to go and watch it. The show more session. You click on that particular link and you go and watch it. So let us go. The trial balance of monthly assets 31st December 2018. The transactions, we have all the transactions, we have the debits and we have the credits. So let us put capital $380,000. Cash $55,000. Land and buildings $140,000. Inventory $20,000. Fixtures $45,000. Receivables $30,000. Machinery $95,000. Bank $85,000. Prepayment $7,000. Profit for the year $84,000. Motor van $80,000. Payable $28,000. Accruals $5,000. Overdraft $20,000. Short-term loan $35,000. Mortgage $50,000. Drawings $45,000. Then you add up all the debits and also the credits. So all the debits should be added up. Let's go to $602. And all the credits also should be added up. So we add up all the credits. It's $602. And I said, if your trial balance, at the end of the day, you realize it's not balanced, then you have to go and check the ledger. So, okay, so this is what we use to prepare the balance sheet. So you just insert the figures.
We are formatted, we are inserting it into we are inserting the figures into our format. So the final solution, fixed assets, land and buildings, $140,000. We have our land and buildings, $140,000. Motor van, $80,000. Have a motor van, $80,000. Machinery, $95,000. Fishes, $45,000. Machinery, $95,000. Then we have our fishes. This is our fishes, $45,000. So we sum it. Then we have $45,000. So we sum up all the fixed assets and we have $360,000. Okay, so we go to our current liabilities, current asset, inventory $20,000. We have our inventory here, $20,000. Our receivables, $30,000. Prepayment, $7,000. Receivables, $30,000. Prepayment, $7,000. Bank, $85,000. Cash, $55,000. So we have our bank, it's $85,000. Our cash, $55,000. Then we sum up all the current assets. So when you sum up all the current assets, we have $197,000. Then we deduct all our current liabilities, which are payables, $28,000. Accruals, $5,000. Payables, $28,000. Accruals, $5,000. Overdraft, $20,000. Short-term loans, $35,000. Overdraft, $20,000. Short-term loan, $35,000. So we add up all our current liabilities, which is $88,000. We deduct it for our current liability, current assets, which is $197,000. So this month, we arrive at our working capital, $109,000. Then we add it to our total fixed assets. As a total fixed asset, $360,000. So we arrive at $469,000. Then we deduct our mortgage, which is $50,000. So this is our mortgage. $50,000. We deduct our mortgage, $50,000. Then we get our net assets or capital employed of $419,000. It will be financed by the capital, which is $380,000. Then add up our net profit, $84,000. So our capital, $380,000. Then we add up our profit, $84,000. So that's it. We arrive at $464,000. Then we deduct our drawings, $45,000 from it. So this is our drawings. These are drawing $45,000. So this man was 45. We arrive at what, $419,000, which is equal to the capital employed of what, $419,000. So it means what, the balance sheet, but it has balance, and we are what, we are correct. Let me go through again. First, how do you prepare a balance sheet? You take up all your fixed assets. These are the fixed assets. You add it up. Comprises of land and buildings, $140,000, motor van, $80,000, machinery, $95,000, fixtures, $45,000. You add it up, you get what, $360,000. Then you take all your current liability, which is this: inventory, $20,000, receivable, $30,000, prepayment, $7,000, bank, $85,000, cash, $55,000. You add it up, you get this figure. This figure, you less what, current liability, which are payable, $28,000, accruals, $5,000, overdraft, $20,000, short-term loans, $35,000. You get this figure. You deduct it from your current asset. So current asset minus current liabilities, you get your working capital. Then you add it up, which is 109. Your working capital is $109,000. Then you add it up to the total of what, your fixed assets, which is $360,000. Then you get what? You get your $469,000. You deduct the long-term current liabilities or non-current liabilities, which is more $50,000. You arrive at this figure. So this figure, which is $469,000, deduct from what? The non-current liability, $50,000. Then you get a capital employed of $419,000. It should be equal to the amount financed by the owner, which is capital, $380,000. Then you add profit, $84,000. It will be $464,000. You deduct your drawings, $45,000 for it. Then you get $419,000, which is equal to what? This figure. This figure. So I hope it is well understood. Let us go to what happened. I'm just explaining it in what. The first asset summation is $360,000, which is land and building, $140,000, plus motor van, $80,000, plus machinery, $95,000, plus fixtures, $45,000. So I'm talking about this figure, the first asset. This is $360,000. How do we arrive at this $360,000? It's land and buildings, $140,000, plus motor van, $80,000, plus machinery, $95,000, plus fixtures, $60,000. So that we arrive at what the total of what the fixed assets. Okay. So that's it. Okay. The total of the current asset is $197,000. How do we arrive at it? Inventory, $20,000 plus receivables, $30,000 plus prepayment, $7,000 plus bank, $85,000 plus cash, $55,000. So this figure, that's the current asset, $197,000. Is inventory, $20,000. Receivable, $30,000. Prepayment, $7,000. Bank, $85,000. Then cash, $55,000. Okay. This is deducted from the current assets. So this figure, $187,000. That's what the current assets, the total current. Okay, total current liabilities is $88,000. This comprises of payables, $28,000 plus accruals, $55,000 plus overdraft, $20,000 plus short-term loan, $35,000. So this figure is the total of what? The current liabilities. This figure. Payables, $28,000, accruals, $5,000, overdraft, $20,000, then short-term loan, $35,000. So this $88,000 I'm talking about. So this is what total current what liability. We deducted from what? The total of what? Current asset, which $197,000. So when we deduct the $88,000, which is the current liability, from the total of what? The current asset, that this figure man of this one, we will obtain our working capital, and the working capital of $109,000 is what is obtained. That's it. So this is what I'm talking about. The total of the current liability assets minus the total of the current liabilities is the working capital of $109,000. Then the working capital of $109,000 is added to the fixed asset of what? $360,000, and the outcome is the amount of $469,000. So these are total fixed assets with $360,000. We add up it to our working capital, which is what? $109,000, and we get what? $469,000. So that's the amount. Okay. The long-term liability, which is mortgage of $50,000, is deducted from it. So $469,000 minus the $50,000, which is the mortgage. So this figure, $469,000 is deducted from the mortgage, $50,000. Then we arrive at what? Net assets capital employed of what? Or capital of $419,000. So that's it. So we deducted this figure from this figure. That's what this figure, $469,000 from the $50,000, which is the mortgage. We arrive at what? Our capital employed of $469,000. This is equal to the owner's worth of $419,000. How do we obtain it? It's the capital, $380,000 plus profit for the year, which is $48,000. Minus the drawings, $45,000. So that's it. The amount financed by capital, $380,000 plus profit, $84,000. It will be $464,000. We deduct the drawing, $45,000 to arrive at this figure. This figure should be equal to what the capital employed or net assets. So that's all. You see, that's the figure. I said earlier, this confirms the accounting equation of asset, which is the accounting equation of asset is equal to capital. That is The net asset is $419,000. It will be called to the capital, which is $419,000. The capital comprises of what? The capital produced by the owner plus the net profit. Then you deduct the drawings, that's the figure. So it should always be equal. Note, as mentioned before, there are other things such as depreciation, goodwill, patent, copyright, and others that will be considered later. The balance sheet comprises of a lot of things, but what I've done, I've excluded depreciation, goodwill, patent, copyright, and others. I will later on, I will do that particular one. So we've come to the end of our lesson on the balance sheet. Let us go through what we've learned. The learning outcomes are: we've learned A, the meaning of fixed assets, current liability, current assets, current liabilities, non-current liabilities, and capital. Define all this. B, current assets are listed in the balance sheet in increasing order of liquidity. That means those assets furthest away from being turned into cash and end up with what? Cash itself. That's how we prepare the current assets. Those in order of liquidity, that those that are far away from capital, like inventory and so forth, it will come first. Receivables and the rest before finally the bank is deposit and the cash. Okay. C, fixed or non-current assets are listed in the balance sheet, starting with those the business will keep the longest, down to those which will not be kept for so long. So that's how we prepare the fixed assets. Those that are further away from the or those that the company is going to use for a long time first, before those that are not going to be used for a long time, that short time. That's what I mean. If you look at the fixed assets, those that the company are going to use for a long time comes first. So you see that land and building is going to be used for a long time, that comes first. Bottom line follows the machinery, then the fixtures. That's it. And the current assets also are reading under of liquidity, that those that are further away from cash first. So you see that's it. Inventory, 20,000, receivables, and so prepayment, bank lending, finally cash. That's what I'm explaining. Okay. The current asset less current liabilities is working capital, as I've said. Current asset total less current liabilities total is equal to what? The working capital. We've learned all this. The total asset less liabilities is what? Capital employed. So that's it. The total assets, which is what? Fixed assets total plus the working capital. We arrive at this figure. This figure we learn mortgage. So we get what our capital employed. That's all. So far, that's what we've learned. And we know the format of the balance sheet now. So please, accounting is a principle. Go through this particular video several times. If you can prepare a balance sheet, you are not a competent accountant. You can record it and go through several times. The more it's a principle, the more you go through, the more you watch it, the more you understand the principle, the more it becomes familiar with it, the more you understand it, the more you can prepare it easy. So go through several times. We've come to the end of the video. Thank you very much for watching. Please practice a lot of questions. If
sit down and learn, practice a lot of questions. If you don't practice a lot of questions, you can never be an accountant. Practice a lot of questions so that we become familiar with accounting principle. Accounting can be difficult, but it is not difficult. It is difficult when you don't sit down and practice it. It becomes easier when you sit down and practice more questions. So if you need more questions, my links are below, my phone number, including my email address is below. You can contact me for more questions. Also, anybody else who wants to learn accounting, you can contact me and I will teach you. And also the students who are preparing for the exams. If you are having problem with your accounting or passing your exam, you can also contact me. And as I've said, I'm a chartered accountant. I do bookkeeping for other accounting services. So if you're a business owner, you need somebody to keep your books or for any other accounting service, you can also contact me. And also, as I said, if I also ask you, if you're a student or if you're anybody who wants to learn accounting, you can also contact me. Please like and share this particular video in order to motivate me. Tell your friends about it so that you share it to them so that they can also come and watch other videos that I have. Or I have links concerning so many videos that I've done. You can click on it and also share it with your friends so that it will motivate me. Also, I want you to comment whatever mistakes I have done. Comment on it so that I can improve on it and give you a better video. Also, subscribe. When you subscribe, every week I make videos so that it can be sent to you. Bye, and watch out for my next video. Bye.